Welcome to our training today on your Equifax credit report and fundability. By the end of this training, you're going to know exactly what you need to do to improve your Equifax commercial credit profile and score to make sure you're fundable with lenders and credit issuers. Look, lenders and credit issuers have a secret set of standards you must meet to get approved for money and to get approved for the most money at the best terms. And a lot of that has to do with information they're getting from your Equifax business credit report. So today we're going to map this out. We're going to map out the things that you can do, the action steps to make sure that you're fundable to get the most money at the best terms, and what you need to do to control your Equifax credit profile and score. For those that don't know me, my name is Ty Crandall, CEO at Credit Suite. If we can help you along the way, feel free to give us a ring, 877-600-2487. We've also got a great link at the bottom of the slides that you'll see, creditsuite.com/EIN, to get a free guide on how to build your commercial credit profile. So let's talk about business credit to start. So we're talking about Equifax commercial today. This is business credit. Now this is credit that's in a business's name. It's not tied to the credit worthiness of you. It's not tied to your social security number. Okay, instead, when we're talking about business credit, we're talking about credit that depends on its bill or is based on the business's ability to pay its bills, not you as an actual consumer. And as we're going to talk about today, your Equifax business credit score is very, very, very different than what you're used to with the consumer credit score. So this company gets information from a lot of places. When we look at where Equifax gets its data, it comes from, for example, a sharing agreement with Small Business Finance Exchange. So if you're not familiar with the SBFE, think of it like this. When you go to apply for a Chase loan, what you might not know is that when you go to apply for a Wells Fargo business credit card or Wells Fargo business loan, they're sharing information between each other. Okay, and they're shared through an agreement with the Small Business Financial Exchange. Okay, the SBFE is an organization that basically it's a give to get mentality. So what that means is it means that if Wells Fargo wants to get all the application information or the loan performance data from Bank of America, then they all have to be able to give it to each other as well. So that's one of the places that Equifax gets their data. They're actually one of 4 vendors of the SBFE. That actually means that the information that's shared between these banks that you usually don't see is actually only presented in some limited cases by what you see on your Equifax business credit report. Now they also get information from Net 30 type industry trade references. These are called vendors. So there's a lot of vendors out there like Uline or Quill that will give you credit lines and report that credit to the business credit reporting agencies. As a matter of fact, if you want to build business credit, the very first step is to get access to these vendors, buy things in their stores, pay your bill on time, and then they'll report that to agencies like Equifax. So it's one of the other places that they get their data. Now you got to be careful here. Over 97% of trade vendors don't report their data. So we see a lot of very large companies, 5 million, 10 million, and much larger, come in and they're building their business credit because they just got denied for loans or credit lines because their Equifax business credit reports weren't built out. So you have to consciously be aware of this and take the necessary steps to build your business credit, or it will cost you a tremendous amount of money as you grow your company. So Equifax combines financial data with industry trade reference data, these two sources, and then they add in utility and telephone data. So information from utility providers, public record information, places like things like bankruptcies, judgments, tax liens, even lawsuits will show up on your commercial credit reports as well. So this is some of a lot of different places that Equifax gets their data, but this is the majority of where what you're going to see on your credit report comes from. So let's talk about the main Equifax credit report. Well, the credit risk score is the main credit score offered by Equifax. Now here's why you need to know this. This is what the big banks use. So when you're going to apply for loans with the big commercial lenders, they're typically looking at this score. Now here's why this is important. Because Equifax is one of the most common sources that is reported to by vendors and credit issuers. That means Home Depot and Lowe's and all these vendors like Uline and Quill, most of them report to Dun & Bradstreet or Experian. Very few of them report to Equifax. And that becomes very important for you because when you find credit with vendors and credit issuers that report to Equifax, you really should consider getting that credit and using it to build this Equifax credit report. Of the 3, Equifax, Experian, and Dun & Bradstreet, Equifax is by far the most difficult to build a credit profile with because so few credit issuers actually report to them. Now, if you need help with that, then get in touch with us. You can go to creditsuite.com/console and we'll do a free consultation with you on business credit building and talk to you about some of the sources that can help you build your credit with Equifax. We have all of that in our finance suite to make it easy to actually access. So your credit risk score with Equifax is the main score that they provide. You need a 90 plus for you to actually be shown as paying as agreed. Now, if you are 1 to 19 days late, then, or a 1 to 19 score, that means you're 120 days late. Okay, so to give you an idea of the different ranges of that score. And again, I've got some training that will just teach you this on YouTube, and that training will actually break down exactly how the entire score works, but that gives you both ends of the spectrum. If you're 90 plus, that means you pay your bills as agreed. If your score is 1 to 19, that means you're 4 months behind. So your score literally depicts how you pay your bills. Now, they also have a business failure risk score that ranges from 497 to 816. Okay, 25% or less chance of payment being overdue if you're in that score range. If you're 101 to 414, you have a 75 to 100% chance of delinquent payments. Okay, so this is very important. All the reporting agencies have similar scores. So the credit risk score depicts how you basically pay your bills. It's a reflection of how you've paid your bills on current obligations or in the past. The business failure score is offered by each reporting agency. They have different names, but it's the same thing. It's used to depict if your business is going to fail over a 12-month time period. This is just how Equifax's scores break down. So let's talk a little bit about fundability, about what makes your business fundable. Then we're going to look back at parts of this of how Equifax ties into this as well. So your business's ability to get funding is what fundability is. Okay, this is basically coming in and building a credit profile and building the, let's say, perception that lenders and credit issuers want to see. So if lenders and credit issuers look at your commercial credit reports or look at how you set up your business and it's not set up the right way, well, then their computers will automatically red flag your application or deny it. So you've seen this before. You apply for a credit card, you either get an instant approval or that message that you'll hear by mail in 7 to 10 days, which almost always results in a denial. That's because their computers are either approving your application or they're putting it in for a manual review, which almost always means that you get denied. So my goal for you is to teach you how to get the approvals, how to get the automated approvals. That's what fundability is. Fundability is what these computer algorithms are looking for to really determine if your business is worthy of actually being given money. So a business starts with no credit profile. You need to know that. So what's on an application is all that's reviewed for approval. So before you build your business credit, what you're putting on an application is very important. Okay, this information I'm about to show you is the basis of you getting approved or not getting approved. And it starts right here with your industry and your business name. So the very first step in fundability is your business's industry. Some industries are considered more risky than others, so you've got to make sure that you keep your name away from high-risk industries. Let me give you an example. Chico's Bail Bonds. Bail bonds is a high-risk industry. If you're going to name your business Chico's Bail Bonds, then the name itself indicates you're in a high-risk industry, and that can throw up all kinds of red flags with these algorithms when you go to get approved. But if you just named your business Chico's, well, then that's the difference between throwing up that red flag and not. So you want to check with your Secretary of State because they may require that business name be unique when you set up your business name. It always is. As a matter of fact, you can have a business name that's the same as somebody else's, but you can't if it's in the same state. Only one business name can exist in a state at a time. So a full business name needs to be used on any application you complete, including your DBA, your days beyond, or the doing business as if you have one. Here's why this is important. Equifax and Experian both will give you failing credit scores if you have no credit. And here's why. If they know your business name and industry and they see that your industry is in one of these high-risk categories, they automatically give you a failing score based on that alone. Can you imagine having a bad consumer credit score even though you've never even had bills report to the consumer reporting agencies? That's what happens in the business world. And it happens because they know your business name, your business location, and your industry. And if that industry is high risk, they automatically give you a failing score. So there's a very good chance right now you may have a failing credit score with Equifax even if you have no credit. Now, if you want to know that, again, visit us at creditsuite.com/consult. We'll do a free check with Dun & Bradstreet and Equifax and Experian for you to tell you if they even know you exist to see if you have that failing score or you don't. Now, let's talk about your business address. They prefer a real physical business address. You can never use a P.O. Box or a UPS address. These will get you automatically declined by so many credit issuers and lenders. It's one of the biggest mistakes you can make. So remember, you don't want to have those kind of addresses. Now, you can potentially use a home address, but again, you want to stay away from P.O. Box. You want to stay away from UPS addresses. Remember, even if you think you're using a UPS address and it's a real physical street address, that doesn't really matter. What matters is the fact that you actually have the business address categorized a certain way. Let me explain. What you might not know that happens behind the scenes is that all P.O. boxes and UPS addresses are registered into a database. Lenders and credit issuers' computers go in and pull data from that database and compare it to the address you're putting on your application. So even though you may think that your address looks like a physical address because it's a UPS box, the reality is that these computers automatically know what it is and automatically, in a lot of cases, deny the application. Doesn't even get red flagged. Gets an automatic denial just because of that. So you've got to avoid those if you don't want an immediate decline. Now, you can use a virtual address. A virtual address is simply where you're using an address or you're renting a physical mailing address without the actual location. So if I want to go rent a location, it might cost me $2,000 a month. But if I want to rent an address at a very big company, let's say a very big high-rise building in Tampa, Florida, where it makes my business look really legitimate, then it may cost me $100 a month or $200 a month. So a virtual address is where you're renting and gaining the ability to rent a mailbox at the location, not necessarily the whole physical address, or not have to pay lease or rent payment. So Regis, DaVinci, Alliance, these are the kind of companies that offer that. You can go to creditsuite.com/virtual to access a really cool deal with Alliance. That's who we recommend. We've used all of them before. So let's talk about a lot of other details. You should have a fax number if you want to have the best chance of getting approved for credit and financing. Doesn't matter if the application doesn't ask for it. But if the application asks for a fax number and you leave it blank, it's a red strike against you. I've never seen this individually get anybody declined. We've helped over 40,000 people build business credit so far, so we've seen enough of these experiences, but it doesn't work well in your favor. Now, what will work against you cannot use a cell phone or a home phone on an application as your business phone. Okay, you also want to avoid Google Voice phone numbers as well. Don't know why. Other voice over IPs are fine, but for some reason a lot of credit issuers don't like Google Voice. So those are some ones you want to avoid. You need to have a dedicated phone number for your business. It really should be a toll-free number. Your business is going to look more credible to lenders or credit issuers if you're using a toll-free number versus if you are not. And you can actually get your phone number listed with 411 if you go to listyourself.net, but you need to make sure that that phone number is listed with listyourself.net. You need to have a business bank account set up so you don't commingle funds, so you separate personal and business expenses, and that account open date can matter. Okay, in a lot of cases, if you ever have an ownership change in your business, for example, they'll look at the date you opened the bank account as when your company opened. So the date you open that bank account is very important. Plus, you have a little known about score called your bank rating, which is an internal credit score that's used to decide if you should get loans like SBA loans. And in order to have a bank rating that's high enough, one of the things they're looking at into that bank rating is the longevity of your business account. Not to mention that you also have another secret credit report through Check Systems, and Check Systems has a credit score and credit report and score that looks at how you manage your business bank account or your bank account, and that is something that could work against you if you don't have your account open long and managed responsibly as well. You need to get your free EIN number from the IRS, okay, and that is very important to truly separate your personal and your business credit profiles and your personal and business liability. Corporation, LLC is better than sole proprietorships and partnerships. Okay, these entities by default will really eliminate personal liability. I'm not an attorney. This isn't legal advice, but I will tell you that if you are a sole proprietor, you are the business. If the business gets sued, you get sued. But if you're a corporation or an LLC, if the business gets sued, you're not getting sued. You're separate entities. So this helps you separate that liability on top of building business credit where you're not personally liable for those individual business debts. You need to make sure your entity is set up in the same state your business address is. That's your best case scenario, especially when you're getting started. And you need to make sure that all of your online and offline listings show the same information. Look, Equifax, Dun & Bradstreet, and Experian all get information about your business from places like Yelp. The yellow pages, your Facebook profile, they have crawlers that scour the web for any and every piece of data they can get on your business. So if the yellow pages has a different address or a different spelling of your name or a different phone number than what you put in your Facebook profile that's different than your website, then it throws up all kinds of issues when they're getting this data and put it into your commercial credit report. As a matter of fact, that's one of the most common questions I'm asked. Why is all this information inaccurate on my business credit report? It's because the information you have online at all these sources is inaccurate. You need to make sure that information is accurate and congruent, because a lot of that shows on your commercial credit reports. You and I, we're not used to this. We're not used to information on our Facebook profile showing up on our consumer credit report, because it doesn't happen. But it happens in the business world. So you have to be cautious of this stuff, because it's not stuff that you see in the consumer world. Let's talk about your SIC and NAICS code. The IRS website is where you're setting up what is known as an industry-specific code. So you have an SIC code and an NAICS code, two different kinds. Now the SIC are the Standard Industrial Classification, and the other is the North American Industrial Classification, is what is actually used to determine the industry that you are in. So here's how it works. The SIC was the original code, had 16 different categories. The IRS said that's not enough. Nowadays we have a lot different kind of businesses than we had back in the day. They came up with an NAICS code and radically expanded the amount of industry types there are. Here's why this matters. As I mentioned, Equifax will give you a failing credit score if they know your business exists, the name and address. Where do they get that? They get that from Secretary of State. So if you file your annual report, they know your business exists, they know your name, they know your address, and they also know your SIC or NAICS code. If they don't like the SIC or NAICS code that you have, or that you've chosen based on your business name, or that has been associated with your business because you haven't taken steps to control the NAICS code that really is what your business is, then what happens is then you can be issued that failing credit score. So it's very important right from the beginning that you research what SIC and especially what NAICS code works best for your business. You choose. Don't let anybody else choose, because if you let others choose, I promise you they are going to choose on the high risk side versus the low risk side. Let me explain. Okay, if you don't choose the NAICS code, it's going to be determined by lenders and credit issuers when you go to apply for credit and financing. Of course, they're going to default with the riskier, if there's any question what industry you are, the riskier of the codes. They associate your business with that code. That shows on your commercial credit reports with Equifax. All the other lenders and credit issuers start using the wrong code. That's not what you want. You want to choose it yourself. You need to research the SIC or NAICS code that works best. Once you know it, you want to use that exact definition and even the code when they ask what industry you're in. That's what we do. If anybody application asks what industry we are in, we say we are in the specific exact definition of software that our NAICS code is associated with. We even put NAICS and the code that's associated with the software industry that we are. Okay, that way there's no question. Now, sometimes what will happen is they'll say, no, sorry, you're in financial services. And then what happens is financial services is high risk. And then they'll put that on our commercial credit reports. And you know what we do? We challenge Equifax and we say, that information is not correct, Equifax. Here's our NAICS code, not that one. And Equifax has come back before and said, sorry, we think it's this. And we say, nah, you're wrong. Here's our tax returns that show we chose that we have the right code. And here's our Dun & Bradstreet and Experian credit report. They're reporting it correctly as well. So you are the only agency that's misreporting it. Again, here is the correct NAICS code. Please update it. And guess what Equifax does? They update it. So you need to vigorously protect the NAICS code that you choose. Here again is an example. Credit Suite. We sell software that helps companies build business credit, improve fundability, and get financing. You could say we're financial services or you could say we're software. We choose software because it puts us in a low risk industry. Financial services makes us high risk automatically. So we chose our NAICS code. We put it on every application that we apply for. We put it on our IRS documents when we file tax returns. And then in doing so, we also monitor our business credit reports with places like Equifax. And if they ever add a second NAICS code, or they have multiple or the wrong one, we dispute it with them to get it corrected back to the one that best reflects our industry. Now, when we go to apply for a loan and they say, sorry, we won't help you because you're in a high risk risk industry, we say software is high risk. They say no, financial services. As we say, we're not financial services. They say, yes, we think you are. We say, based on what? Here's our commercial credit report with Equifax. Here's our Dun & Bradstreet. Here's our Experian. Here's our tax returns. All of these say exactly the same NAICS code. How can you say we're something we're not when everybody else has it correct? They can't dispute that, and they automatically have to come back and default and choose the right NAICS code. Very important. That's why I'm spending time on it, that you choose this. Now, you want to be honest with what you choose, but there's no reason to choose the riskiest code if there's a less risky one that applies. Meaning, you don't want to be in bail bonds and say you're a software company, right? That's a complete lie. But in our world where we could be one or two or three industries, as many can, then you want to choose that. Let me give you an example. Let's say you're a credit repair company, right? Well, credit repair is financial services. It's by default high risk, but you're also doing consulting. So you probably want to choose a less risky consulting type NAICS code instead. Okay, that makes a big difference. And Eric says, how do you update your business address with Experian and Equifax? You just simply, the best case is you get credit monitoring with both of them, and they have an easy way with their credit monitoring to do that right online. So here it says, upgrade DBA to corporate name, same name, address, that about credit history I have with D&B. I'm not sure what that means here, but I will tell you that with Dun & Bradstreet, you can update your credit report through a service called iUpdate, completely free from Dun & Bradstreet. You can get that information updated with them as well. If that doesn't answer your question, ask it a different way and I will get you an answer. So in order to get set up with the credit reporting agencies, you want to go to Dun & Bradstreet's website to look for your business, dnb.com/duns-number. Now, we also have a great way to do this at creditsuite.com/reports. If you go to creditsuite.com/reports, you can get set up with all three reporting agencies from one link. Okay, if you can't find it at D&B's website, well, then you want to get your free DUNS number. A DUNS number is how D&B gets your company into their system to generate a PAYDEX score. If you go to get your free DUNS number, Dun & Bradstreet will call and email you trying to sell it to you. Okay, just keep in mind, you never need to pay them or anybody else for that DUNS number. Okay, it is free, but they will try to sell it to you and roll it into a package, just so you know. Now, a DUNS number plus payment experiences is what gets you a PAYDEX score with Dun & Bradstreet. I know this webinar is about fundability with Equifax. I can't help myself to help make sure that you're set up with the other reporting agencies as well. A lot of questions I get about this. Why don't I have a Dun & Bradstreet credit score? Because there's two requirements. You must have a DUNS number. You must have 3 accounts reporting to D&B. Very different than Equifax. With Equifax and Experian, it only takes 1 account reporting to generate a score with them. Or again, you could be generated a score if they know your name and address and they think you're in a high-risk industry. Either of those will generate a score with Equifax and Experian. So once you're in D&B's system, then you can search Equifax and Experian as well. Here's that link I gave you, creditsuite.com/reports. One link lets you search D&B, Equifax, and Experian to see if you're set up now, and it's completely free to do. So check this link out. You're going to have 3 outcomes. Either nothing will show up, the name and address of your business will show up only, then you have a problem. So here's how to do the search. Go to creditsuite.com/reports, choose which one, Dun & Bradstreet, Equifax, or Experian that you want to actually run a search with. Okay, do not enter your address. Enter your business name and your business state only. Then what will happen is they will either populate your exact address, and maybe that address is right or wrong. If it's wrong, then you already know you have a fundability problem. But the minute they show you that, then they're either going to show you have trade lines or not. 3 outcomes. Either nothing shows up, they don't even know you exist, your name and specific address show up, which means they do know you exist, and if they don't like your industry, you probably already have a failing score at that point. Or the third outcome is that your name, address show up, and also it shows up that you have trade lines, okay? So those are the things that you need to know. You need to know that those are the 3 outcomes. This search is completely free to do, so I recommend that you make sure that you get it done. So let's talk about getting set up with Equifax. So you've got to be listed with the reporting agencies, including Equifax. Equifax. It's necessary to establish business credit, okay? And here's why. You don't want to go get Dun & Bradstreet's Credit Builder and spend $1,400 or $150 a month to build credit with just Dun & Bradstreet. Think about this as a consumer. If you only ever built your TransUnion credit report and didn't build Equifax and Experian, that's really problematic, right? When you go to get a mortgage, they're using a tri-merge credit report, looking at all three credit reporting agencies. They're looking at your middle of three scores. You can't even get a personal mortgage if you don't have credit built with all three reporting agencies. Same thing in the business world, just as problematic. You've got to make sure you build credit with Dun & Bradstreet, Equifax, and Experian. And the problem with D&B's Credit Builder is you're only ever building it with Dun & Bradstreet. So you've got to make sure you establish credit with all three of the reporting agencies. Remember, especially Equifax, because they're the hardest one to report to, because most credit issuers don't report to them, but they're also the number one used by big banks. So if you want to go get bank loans, bank credit cards, SBA loans, you've got to build this thing out with Equifax. Okay, you can also be denied funding with no credit score at all, as we talked about, and you'll also get a denial with low credit scores with any of them as well. So just so you know that. And Rita says, do you do services in Canada? Credit Suite, if you have a U.S. business, we can help you, yes. But if not, we are not the best source, but a lot of this training is still applicable in Canada, just so you know. Business credit history. So you want to improve your credit reports with each one of the reporting agencies to get the best score with Equifax. So you want to get great scores by paying bills on time. This means Equifax credit risk score of 90 or better, as we talked about. Look, you have a huge benefit. In the business credit reporting world with Equifax, your credit score is based on only one thing, only one: how you pay your bills. All you need to do to get a good score is get accounts that report to Equifax, pay the bills on time or early. That's it. If you do those two things, you'll get good scores. But if you pay the bills late, you're going to get bad scores. So one thing you need to control, you got to make sure you pay that bill as agreed. If you did that with credit that reports to Equifax, you'd have a 90 score better. If you did it with Equifax, you'd have an 80 score better. Both of those mean the same thing. You pay your bills on time. Now, FICO has an SBSS business score, and it's driven based on your business credit scores. Okay, if they can't find information on your business credit scores, they default to your consumer credit scores. So if your consumer credit is bad, you need to build your business credit, because your FICO score for your business will default and look at your consumer credit scores if your business credit scores are not established. So you need to make sure that you get good scores by getting accounts that report to these reporting agencies, paying the bills on it as agreed. That's also by default going to get you a good FICO small business score, which is necessary and to get an SBA loan. You can't even get an SBA loan without having a score with FICO that shows you pay your business bills as agreed. That can only happen if you've taken the steps I've talked to you about so far. Now with Experian, some other things factor in other than just payment history, but 85% of the score has to do with how you pay your bills. So again, it's important with all reporting agencies. You want to make sure that you have a website that reflects everything you do. Okay, otherwise they're going to look other places online for that. If you want to build a cheap website, go to a place like templatemonster.com and have somebody on Upwork build it for you. Or nowadays there's all kinds of services that could build your website, but be careful. You need to make sure that you own the domain and URL. Some of these other type of website companies that are out there, you're just building a website on their own server using their own domain. You do not want that for fundability purposes. You need to make sure you control that domain, that it's on your own, that it's not being shared with anybody else like the company that's building the website. You need a professional website. You can get a place from a place like GoDaddy. Okay, your domain name needs to be the same as your business name and your email address. That's best. Okay, our name is Credit Suite. My email is info@creditsuite.com. Our website is creditsuite.com. That's the kind of synergy you want. Matter of fact, I tell people the very first step, we're actually getting ready to release a course on how to start and grow a business. Okay, and that's one of the first things we talk about is that, look, the very first step of setting up a business is to choose your business name. And before you choose a business name, don't even think think about getting a business name if the URL isn't available. You brainstorm potential names, and you look to make sure that domain is available. If the domain is not available, don't even choose the business name. Get a business name that's congruent with the actual domain. So in order to do that, you've got to make sure that domain is available, or it creates all kinds of fundability issues. Am I saying you'll be denied for credit and financing? Yeah, I am. You'll still get some, but you won't get approved with other sources, and the ones that will, you won't give you as much and won't give you as good of terms. So it's very important that you do this to get the most money at the best terms. Again, as I mentioned, that email address needs to be the same as the domain. Stay away from Yahoo, stay away from AOL and Gmail and Hotmail. Your business name and or the business email you're using on applications needs to be congruent with your domain. And I just gave you an example in our world here at Credit Suite. You want to make sure you have any necessary licenses as well. Sometimes you need them in the city, sometimes you need them in the county, sometimes you need them in the state or your industry. You need to make sure that the information on your license is congruent with your Secretary of State, with your website, with all these other places I mentioned. That congruency is one of the number one reasons applications get denied. Okay, let me say it again. Over 50% of all loan applications that are submitted are denied because of incongruencies. Because the name, the address, and the phone number of the business that you're putting on the application is not exactly the same as places like your license and the Secretary of State. It's mind-blowing. I can't tell you how many people come to us because they get denied. We go and look at their Secretary of State. There's information there that's not accurate with their application. We update the Secretary of State records, and guess what? Whammo, they're approved when they immediately got denied. They thought it was their credit score. They thought it was their revenue. They thought it was all these other things. It was simply that their information didn't match with Secretary of State. Incongruency of information, number one reason that applications are denied. More than half of them are denied for that reason. So make sure that license address is correct. Okay, now, business bank accounts, business financials. You want to look beyond just your Equifax report and into the future. The future of other kind of bank loans and funding is important. Okay, so again, some of the things you need to keep in mind is when you want to go to apply for an SBA loan in the future, you should keep about $10,000 in your business bank account 90 days before you go to apply. This has nothing to do with Equifax, everything to do with another credit score called your bank rating. Does this matter with anything else? It doesn't. It doesn't matter if you apply for a loan through an online lender. It doesn't matter if you apply for a credit card. But when you do go to apply for a big bank loan, make sure you do that one thing. It's going to help you. We talked about congruency. It's important. Secretary of State records, IRS information, your business credit reports with Equifax, okay, your income documents, your yellow pages, your Facebook, your website, all that needs to be congruent. I've already talked to you a little bit about the importance of that. So let's talk about improving your Equifax credit report. Well, here are some of the most important tips. Okay, know what's going on with public records. Do you know where TransUnion, Equifax, and Experian verify your consumer credit report records? With a company called LexisNexis. You can get a copy of your LexisNexis credit report. You should get a copy. Okay, if you're a client with Credit Suite, that's one of the things we help you get because that's where a lot of public information is stored. So know what's going on with the public records of your company. Remember, in the business world, even if you're part of a lawsuit, it shows on your business credit reports. Make sure you get credit that reports to the reporting agencies, especially Equifax, and use that credit. If you get a credit card that reports to Equifax business credit report or Equifax commercial, you need to make sure you pay that bill on time or as agreed. Make sure that you do that because it's the number one factor that affects your score. And how you handle your financial and non-financial accounts will matter as well. Remember, a small business financial exchange, Equifax is a vendor of them. They take information that comes from the big banks, and that information shows on your business credit report. So if you know vendors report to Equifax, pay them as agreed or on time or early. If you know you have bank loans that report, do the same thing. Make sure you're consciously getting credit that reports to Equifax. It's very important as well. Make sure you manage all of your obligations, especially with the big banks, because all that goes through the small business financial exchange. Equifax is a vendor. They go in and pull that data, and a lot of that end up on your commercial credit report. Okay, clear debts ASAP. Equifax will give you better scores if you don't keep a balance on your revolving accounts. Not really the same in the consumer world. Consumer world, you're judged by utilization. You don't have that problem in the business world with Equifax, but you do get more credit if you're paying your bills on time and in full. So keep that in mind. Credit utilization matters when it comes to that. It should be less than 30% on the consumer side. Doesn't really matter on the business side. You just want to try to pay those things off if you can. And of course, you want to avoid late payments. So remember, one of the basic ways to improve your fundability to be more appealing with lenders and credit issuers is to build this Equifax commercial credit report and score. Keep an eye on those public records. Paying your bills on time or early, getting credit that reports to them is all the most important things you could do to have the best chance of getting the highest scores with Equifax. Look, it's completely free to talk to us. You can go to creditsuite.com/consult. We will do a free check with the reporting agencies. We will check your Secretary of State records. We will look at all of this data to see how fundable your business is at no cost. We'll even tell you how much financing you can get for your business. You can do that at creditsuite.com/consult. Grab your free business credit building guide. Get the exact steps to build business credit at creditsuite.com/EIN. Give us a ring or send us an email with any questions as well. 877-600-2487 or info@creditsuite.com. Rita says, I have online business in the USA. Do you fund them? Yes, we do, Rita. If you have a business set up in the United States, we can make sure that your business is set up where it's fundable. We can help you go through the steps to build business credit that's linked to your EIN, not your personal social or not your personal identification number in Canada. And we can also help you get all kinds of financing potentially as well. Just give us a ring or give us a call or give us a ring or send us an email. At the top right of our website, creditsuite.com, you'll find other links. We have one of the most popular financial podcasts on iTunes. Okay, we have over 355 episodes we've released. It's one of the highest ranked financial podcasts that you'll find, so you can listen on the go. We go live on Facebook and YouTube daily, or not daily, weekly, and daily we do release tips on places like Instagram and Twitter that help you get the most money for your business. So if you want to access all that, all you have to do is go to creditsuite.com. And of course, if this helped you, do me a favor, like the video, okay, and subscribe. I can see in real time the likes of the video. I've already got 10% of you that are here right now have already done so, and I appreciate that. So give the video a like. Okay, subscribe to our channel. We'll notify you when we go live. This is what we do here at Credit Suite. Tons of free education and training that teach you everything you need to know to get the most amount of money for your business. Real Man Up says, will you teach us which vendors report to Equifax? We have a lot of that. If you do any of the vendor training and go to our YouTube channel and look at our vendor training, we've got a lot of that teach you ones that report to Equifax. If you give us a call and set up a consultation, we can walk you through that as well. Just so you know, our finance suite that's very, very, very affordable and easy for business owners to use also walks you through this. Every source that reports to the reporting agencies we list, we tell you who reports to them, the underwriting guidelines, we give you a special link to get approved. Like, we really simplify the process by teaching you all of that information, so it takes like 2 or 3 years of building business credit, condenses it to like 6 or 9 months. So yes, just get in touch with us. This is exactly what our finance suite will do as well to help you along the way. Thanks everybody for tuning in. I will see you next Tuesday live on YouTube at 1 o'clock Eastern time, and feel free to give us a call in the meantime or visit creditsuite.com/consult to get your free fundability consultation. Thanks everybody. Have a great